In this class, I am going to discuss what is GST. Let us have a brief introduction about GST. So, what is GST? Why GST has been introduced in India, and also how, what is the modus operandi, what are the modalities, technicalities and procedural aspects in GST. So, first of all, let us see what is GST. So, about GST, I say it is a tax on goods and or services. It is a tax on goods and or services, means tax on goods or tax on services or tax on both goods and services. Okay. So, existing tax laws, because it is an indirect tax, let me write that also. So, GST is an indirect tax. So, what is indirect tax? You understand, you know, I know. So, it is an indirect tax, it is on goods and or services, and again I say it is destination based. This is destination based consumption tax. So, this is a tax on consumption, and consumption is consumption of goods or consumption of services. Okay. And this is levied intrastate levy. Base is supply. Supply is the base on which this is a charging section. So, taxable event, you can say, now taxable event is a supply. When there is a supply of goods or when there is a supply of services or supply of both goods and services, in such a case you have to pay what we can say GST, goods and service tax. But remember, this goods and service tax is not a single thing. The name of the tax is goods and service tax, and it has various components. What are the components? It is like this. Number one, suppose there is a supply intrastate. Intrastate means within the state. When the supply is within the state, that is called intrastate. The law clarifies that if the supply and the supplier are in the same state. Suppose the supplier belongs to Delhi and the supply was made in Delhi, means delivery was given in Delhi. Supplier is from Delhi and supply was given in Delhi, that is local, you can say intrastate supply. Suppose the supplier is in Tamil Nadu and the delivery supply was made in Tamil Nadu, that is a local supply. So, intrastate supply. So, in the case of intrastate supply of goods or services for both, you have to pay GST. But this GST is in two components. The first component is central GST, that will go to central government, and also state GST, that will go to state government. So, in this particular pattern, speciality is earlier state governments and central government, they were levying and collecting taxes in isolation, distinctly, separately, on their own. Now, both are imposing simultaneously. There is a concurrent levy. Together, they are imposing. So, yes, CGST plus SGST is payable on this transaction. Okay? And sometimes union territory GST, if the transaction happens to be in union territory, these go to union territory. In India, we have union territories also. And if it happens to be intrastate, then if it is interstate, between two states, interstate means between two states, then here also we have to pay one single tax that is called integrated GST. It is like earlier something like uh, in the case of interstate sale, it was something like CST, but it is a supply. It may be sale, it may be manufacture, it may be anything. Anything is a supply, because the supply is a very wide term. If it happens to be a supply, there is a GST, and single IGST, integrated GST. This GST is payable to state governments or UT, as the case may be, and state governments will retain its portion and send the amount to CGST. So the amount will go to, some portion will go to central government, some portion will go to state government, and the administration aspect mostly is taken care of by state governments as far as intrastate is concerned. But if it is interstate, only one single tax is payable, that is integrated GST, that will straight away go to the central government. The levy is under central law. The collection and administration is taken care of by central government only. But the only thing is, this has again two components. In this, the components are CGST portion, central tax, and state tax. It is together. So suppose this GST is 20%, it is 10% here and 10% here, hypothetically I am taking. So here IGST will be together, it is 20%, but 10% will go there and 10% will go here. So it is a tax on goods and or services, it is an indirect tax, and it is a destination based consumption tax. Destination based consumption tax means it is a tax on destination. When there is a consumption, there is a tax. Suppose the consumption is in Delhi, it will be, the tax will be going to the state of Delhi. But earlier taxation system, there was not guaranteed. Earlier taxation system mainly, it was something like production based or sale based, particularly if you look at CST, etc. But now it is consumption based. So you can say GST is nothing but a different form of, a particular form or variant of value added tax. GST is a value added tax. It is a tax on value addition, not on gross value, because multi-point tax with the set off of earlier taxes. So that's what we see in VAT, that's what we see in excise and service tax. In excise and service tax, we are saying that it is input tax credit is available here also. So this is a value added tax. That's the reason why it destination based consumption tax. All destination based consumption taxes are value added taxes only, right? So the scheme of GST that we have introduced is like this: intrastate supply, interstate supply. Supply of what? Supply may be of goods, supply may be of services, supply may be of both. See, you see, both, how both can be. For example, you go to McDonald's or a restaurant. If you go to a restaurant, you find VAT plus service tax is being levied and collected. Maybe you have paid. Both service tax and VAT was being levied and collected. Now, and similarly, if you look at works contract, state government is imposing sales tax, VAT or CST, and central government is imposing service tax on service portion. Service portion is taken separately, and goods sales value is determined separately, and state government is collecting sales tax, central government is collecting service tax. But now under the GST regime, on works contract, single tax that is imposed GST. It's a combination of goods and services, but only one tax is imposed. And here also in restaurant, foodstuffs, etc., one single tax is collected, that is GST. There is no segregation or bifurcation like service tax or VAT, something like that. There is nothing like sale or service, it is supply. There is nothing like manufacture. All the concepts, all the different taxable events like manufacture, sale, service, etc. All these taxable events are subsumed under one single taxable event, that is supply. Put together it is called supply. Supply may include manufacture and remove supply. Supply may include sale and delivery. Supply may include service, provision of service. So that is supply. So what is GST? Practically it is a value added tax. It is a destination based consumption tax. It is an indirect tax. And it is a tax levied both by central government and state government concurrently and simultaneously, not in isolation. That is the speciality. So I would like to go a little more in elaboration. I would like to elaborate a little more because it is a tax on goods and or services, right? So we have to examine, let us examine the taxes on goods and services at present. What are the taxes that are available? So then we can have a better idea. See here, at present existing taxes, goods, what are the indirect taxes that we are having? Services. So on goods and services, if you see, I will discuss central level. On central level, you see, on manufacture, excise duty. Okay, and central excise duty and service tax on services. These are the two major things, right? And central level, suppose import or export, something like import or export. So on import duties, customs duties. Okay. Other than this, there are so many other taxes, additional duties, taxes, cesses. For example, toilet and toilet preparations. Toiletry products, on toiletry products in central government, central law is there, that is levied by central government under central law. Of course, that is collected by state governments. And there are other additional duties of excise. For example, on textile and textile articles, on tea and tea waste, on goods of special importance, there are additional taxes. And so many taxes like surcharges and cesses, like say for example, national calamity contingent duty. It's a surcharge on few products, tobacco, petroleum, automobiles, etc. And similarly, education cess, it is still there, education cess and secondary higher education cess on customs goods, on customs. And you know, recently they have introduced infrastructure cess on vehicles. And additional duty of excise under section 85 of Finance Act 2005, that is on tobacco products, etc. Like this cesses, so many cesses are imposed under excise also. So many cesses, surcharges, something like national calamity contingent duty, additional duties, even mineral products. Of course, they are not subsumed right now. So other taxes are also there, others. Say for example, import. If when you import, you are paying BCD, basic custom duty, countervailing duty, and special countervailing duty. On different taxable events. So, and this is okay, state level, others. There are others like cess, etc. But central level and state level, too many taxes. We cannot count also. Say for example, state level main taxes, local on alcohol, you can say on alcohol state excise, liquor, potable liquor, alcohol for human consumption, state excise is there. And on sale, sales tax, If you talk about sales tax, it may be CST on interstate sale and VAT on local sale. Though it is a central law, virtually it is administered and tax is collected by state governments only. So I have put this under state level and measure these two. And again, if you see property related taxes, stamp duty, when you go for registration of immovable property, registration, mortgage, etc., etc. So property related taxes and electricity. On electricity also there is a electricity duty. So property related taxes, electricity related taxes, state excise and petroleum products separate, of course it is there, let us see, and lottery, gambling, etc. Entertainment tax, if you go to see a movie and on the back or so, you see the taxes that they are collecting. You don't feel like going to a theater for seeing a movie because heavy entertainment tax is there. And similarly, luxury tax, if you stay in a hotel, star hotels, etc., luxury tax, purchase tax, or say consignment tax, and similarly, other taxes like lottery, entertainment, entry tax for entry of goods in another from other states, and also octroi. This is collected by municipal authorities for entry in the municipal area. And I have only given a few things. Other than these, other taxes are also there. Say so many taxes are there being collected by state governments. These are all indirect taxes. And on services there is a service tax plus cess, etc., etc. So many varieties of taxes are being collected on so many taxable events. See, for excise, the taxable event is different, manufacture, and for service is a taxable event. For sale is a taxable event, and entertainment is a taxable event. Lottery, gambling, or betting is a taxable event. So for property, sale, purchase, etc., transfer of immovable property is a taxable event. So liquor is a taxable event, manufacture of liquor. Like this, different taxable events are there, different taxes are being collected. So we need updation. So over a period of time, there are so many complications. Complications started mounting, and there is a pressure on the government, and particularly in different parts of the world, majority of the countries which are active in developing and active, they have already updated themselves. See, constant updation is always necessary. Even if you use a mobile or a computer, he will say, this is outdated, please update, new version is available, please update. So if you don't update, what happens? Even in your mobile, if you don't update, what happens? Old version, for example, PDF, he will say, this is not open here in this. Why? Because new version is available, please update. If you don't update, you can't open it. Updation is the hallmark of growth and hallmark of progress. So updation is necessary. See, our indirect taxation system, it was given by the Britishers, because you see, if you go back to 1935 Act, Government of India Act 1935, so Britishers divided the country into different provinces, states and the center, and a type of federation was created. So India became federal by virtue of 1935 Act, and they have bifurcated the powers also. State governments have been given power to collect taxes on sale, of course, liquor, state excise on liquor, etc. And central government has been given power to collect taxes on central excise, etc. So autonomy, states are autonomous, but the times have changed, and at the time the taxation system was tax on gross value, but number of activities increased, number of taxes increased, and industrial growth is there, and it created a number of complications. So gradually what we have done is we have switched from gross value methodology of taxation to tax on value addition, value added taxation system. First time we introduced in central excise in the year 1987 in the name of mod VAT. You know, so with the introduction of mod VAT, central excise became a value added tax. And then in service tax, we introduced service tax in 1994. And there we have what we have done is in 2002 we have made service tax a little bit value added tax, and finally in 2004 we have integrated both goods and services, manufacturing act, manufactured goods and services integrated, and we made a common input tax credit scheme called SENVAT credit scheme. So by virtue of that, service tax also became value added tax, but though these are two different taxes, what happened was the credit flow, because both are central taxes, credit flow from one other is allowed. For example, excise duty paid on inputs by service provider, that is available as credit, and similarly service tax paid by manufacturer on input services etc., that is available as credit. On capital goods, both service providers and manufacturers were getting credit, so integration was possible. So integration was made in the year 2004 by 2004 SENVAT credit rules. That was a very important development. And then 2005, between 2003, of course 2008, between 2003 and 2008, local sales tax has become tax on value addition. We introduced VAT after a long pursuit. State governments agreed to introduce. First state was Haryana in 2003. I think the last state to introduce VAT was Uttar Pradesh, and finally by 2008 all states became VAT states. So in sales tax also we introduced what we can say value added taxation system, but that is a tailor-made fragmented taxation system. Why? Cascading effect is still there. Why cascading effect was still there? Suppose CST is there, still there. So CST is origin based tax, not destination based. So there was a cascading effect because CST paid in one state is not available as a credit or input tax credit in the state of delivery. So the tax CST paid on the sale of goods, sale and purchase of goods is not available as a credit, so automatically it becomes a part of cost. It added to the cost. So there was a cascading effect, deliberate cascading effect. Otherwise also there is a cascading effect. There was. Why? Because suppose a manufacturer paid VAT on purchase of inputs, that is available, not available to the manufacturer for excise duty payable on his final product removed. Similarly, a trader who is trading goods, maybe he paid some service tax or something like that, central tax. Credit is not available to the trader. He cannot use that credit input tax credit on services to pay VAT or CST as the case may be. Like this, states are different, states level taxes are different and central level taxes are different. Tax paid at state level is not available as credit for taxes payable at the central level and vice versa. So there is a cascading effect. VAT paid became a cost, or service tax or excise duty paid became a cost at the state level. So, or moreover, there are so many taxes which you pay, but credit is not available. So basically there is inbuilt cascading effect. And moreover, we have to, as the times change, we have to change ourselves. Okay? So when the times change, we have to change. Look at the board, see the taxes, read the taxes and find out. You will also agree, yes, there are so many taxes. You will find that there are so many taxes. Okay? So there are so many taxes. How to deal with all these taxes? Different taxable events. So different taxable events, different taxes, how to cope with. Look at the procedural aspect. What is happening? What is happening to the industry? There are number of compliances, complicated. So over a period of time, this taxation system has become too complicated, and it requires immediate updation. Immediate updation is required. That is the reason why we thought of doing this. So why we have introduced, why we are switching over to the GST system from the existing indirect taxation system. Too many taxes, too many assessments, too many authorities, state authorities, central authorities, different assessments, different timings, and no cross credit facility, and different filing of returns with the different authorities, no so much of paperwork. All these things are there, complications are there. So now we need updation. So what we did is updated version. So indirectly we are following, directly or indirectly we are following this VAT system only in India. It is there in sales tax, it is there in services, it is there in excise, everything. But we need some surgical operation, some major operation. So what we have done is updated version of VAT we have introduced, that is called GST. So for this, manufacture is a taxable event, for this import is a taxable event, for this service is a taxable event. So like this sale is a taxable event. So different taxable events are there, complicated. So we have simply merged everything. Every taxable event, all the taxable events, most of the taxable events are put under one basket. That basket is a supply. We call it supply. Whether you are selling, whether you are manufacturing and supplying, whether you are providing service, everything is called supply. So it is supply of goods and services. So now we have GST payable on supply, and supply has been defined. What is supply and what is not supply, that has been very clearly defined. Of course, it's a very big concept requiring a lot of modifications in future to come. So see, look at this. These are the things of what we have done now under GST. Under GST, most of the taxes are subsumed. Subsumed means merged under one thing. See, all the taxable events are subsumed under one single concept, supply. Now there is no manufacture, there is no sale, nothing. And secondly, the taxes, for example, excise duty on manufacture. Excise duty on manufacture, this is no more, this is subsumed. Service tax on services, this is subsumed. Import duty, BCD is there, but CVD is subsumed. Special CVD is subsumed, no more. State excise, sales tax, CST, VAT, both are subsumed. Stamp duty is there, electricity is there, lottery tax, that is subsumed. Entertainment, no more. Luxury, no more. Purchase tax, no more. Entry tax, no more. Octroi, no more. Like this, all the taxes, these are not different taxes. These are all put together called GST. So the name is now GST. Suppose there is a case of entertainment. We don't collect entertainment tax separately. We don't collect taxes on luxury separately. Simply we call it state GST. State GST contains everything, mostly. Okay? So state GST. What is not there, what is not subsumed, what are the taxes that are not subsumed still there? It's very important even from the examination point of view. All these taxes have been subsumed. Now, not. Number one, petroleum products. Petroleum products, peculiar feature. There are 5 products which they have identified. Petrol, diesel, crude petrol, aviation turbine fuel, and you can say natural gas. So petrol, diesel, total 5, 1, 2, 3, 4, 5. These 5 products actually, if they are under, seemingly they are under GST, but right now GST, they are out of GST right now. and at a later date to be announced, a date will be given. There is something called GST Council, a high powered body, and which decides on which date the GST would be made applicable to the petroleum products. Till then, GST is not levied on these products. So right now it is out. What date will be, we don't know. So next to that, obviously, state excise on liquor. State governments still enjoy the collection, and stamp duty etc. on property, immovable property. State governments still enjoy. Electricity duty, still they enjoy on electricity duty. Okay. So unfortunately, these are still there. State governments are still collecting and enjoying, and state governments are also collecting on tobacco products. On tobacco also, they were not agreeing. Okay. So practically, electricity, property taxes, stamp duty, and petroleum products, these are out of GST right now, and because of the presence of these, there is still some cascading effect. You cannot say that the cascading effect has been totally removed. It is still there because of these. Suppose these also are submerged, these also subsumed under GST, then almost a near perfect value added taxation system with minimum or no cascading effect is possible. Right now, there is still some cascading effect. And what about CVD and special CVD? For CVD and special CVD, these are on imported goods, right? And also, see what is happening. IGST, I have already told you, interstate, on interstate supply, IGST is payable now. So earlier it was CST on goods and interstate supply of service. In case of service, it was service tax, but in case of interstate supply of the sale of goods, CST was payable. Now CST is no more, and now IGST is payable. And earlier on imports, imported goods, custom duties are payable, you know. What were the taxes payable? Now IGST is payable. Earlier CVD, special CVD. Of course, BCD is payable even today BCD is paid. But instead of CVD and special CVD, simply IGST is paid. So CVD, special CVD also subsumed. By now, I think you are able to get a glimpse of idea what is GST, and it is a tax on goods and or services. It is levied on intrastate supply or interstate supply, and taxes are CGST, SGST together on intrastate, whereas in case of interstate supply, it is simply one single tax, that is IGST, integrated GST. So acts have been made by Parliament, okay, approved by, assented to by President also, and date 1st July, that was announced. So let us see what are the developments that take place, but right now it is to understand this way. So I hope you understand what is GST, how a working of GST. So intrastate supply, state governments will take care of administration matters. Interstate supply, central government will take care of. Okay. So why GST has been introduced? I think you got an idea, because outdated, our taxation system is outdated. Updation is necessary. New version is available. That new version is a unique GST model we have introduced in India. We have not followed any country's system, because the system of GST we introduced in India is somewhat unique, because no country has a mechanism called IGST and IGST credit system, but we have it. unique feature. That's a unique feature in Indian context. And then so many taxes and subsuming all these things are peculiar to Indian context. So many authorities, so many compliances, so many assessments. Now there are not so many assessments. Of course, registration is necessary for each state if you have operations in more than one state. Of course, that is somewhat complicated. In each state you have to get registered and you have to submit, you have to get the assessment and you have to submit returns, because India is a federal state. We have no option. In a federal state it is necessary. So, reasons. One of the major reasons for introducing GST is complication, plethora and out of date system. These are the reasons. Now, with this understanding you will be able to write on your own also, right? Then, how is GST made in India? Let us discuss briefly about that also. How is done? Because the existing system, if you look at the existing system, it is based on federal structure. States are imposing taxes separately under state list, and the central government is imposing taxes and collecting taxes independently under union list. You know, under the existing system, what is the taxation? See, Article 246 and read with 7th schedule. So, in 7th schedule, you know, union list, state list and concurrent list. So, this is union government, this is states, and both have power. So, there were 97 entries, 66 entries and 47 entries. I am giving the number last entry. If you count 1, 2, 3, 4, 5, the number will be more. So, under the entry numbers of the union government was collecting taxes, levying and collecting. And on state list, state government was doing. And there was no interchangeability. So, this jurisdiction of center and state, or you can say somehow this is somewhat complicated. Not only complicated, this is not conducive to taxation system that is prevailing in the world today. So, what we have done, what the government has done, it required amendments. So, goods and services separate taxes were there. Now, what they have done is they have introduced an article called 246A. So, this powered concurrent levy. Concurrent levy means both center and states can impose tax together simultaneously in one go when there is a transaction. So, they have changed the concept to a broad concept called supply. On supply, state governments and central government, both of them have power to do. So, it has given power. And concurrent levy, and also interstate transactions. On interstate transactions, supplies, so exclusive levy by central government, because state governments may quarrel, may have a dispute. So, the power has been given to central government. Article 268 has been amended. So, said by government. For this, an article 269A was introduced to levy, to give power to the central government to impose GST, IGST, integrated GST on interstate transactions and also imports. And because center and states now have to move together, not in isolation. To move together, an understanding, a proper understanding between center and state is necessary. They cannot move in isolation. So, they have formed a council called GST Council. Under Article 279A, GST Council, very important, GST Council was constituted. by 101st Amendment Act of Constitution of India. First 101st Amendment Act of Constitution of India. So this has been introduced. So GST Council, Union Finance Minister and Minister of State are members, plus finance ministers of all states, they are members. Out of them, Union Finance Minister Arun Jaitley is chairman, and vice chairman is from among the state finance ministers, and one-third voting powers, majority, one-third voting powers are with the central government, two-third voting powers are with the state governments. They together, they decide, they deliberate and evolve common policy for all. So now GST has become one nation, one tax. Entire nation has one single tax. Even when you talk about tax rates, when you talk about a particular product, suppose you talk about this product, all over India, wherever you go, the tax rate is same. And earlier, different states were having different tax rates. One nation, one tax rate for the same product. Even if you go to Jammu and Kashmir, that has to prevail in the same way. Even though this Central GST Act is not applicable all over India, see, is applicable all over India except the state of Jammu and Kashmir, but Jammu and Kashmir has to make a law in consonance with, in the line of the state GSTs. It cannot go in isolation. Now it cannot escape. It cannot say that I want to have my own system. It's not possible now. Technically, they are making their own laws, but they ought to make laws as per the norms decided in the GST Council. So these three articles in particular, of course, Article 286 also has been amended. By virtue of these articles in particular, now a new system has been evolved. Now there is a concurrent or simultaneous levy of both CGST and SGST. Earlier, they were imposing and collecting taxes in isolation, separately, exclusively. Earlier, they have exclusive powers. Now they have concurrent powers. Everything they discuss together, and 3/4 majority is necessary, and finally they pass some resolutions and decide and make recommendations, and accordingly the state legislatives and parliament make laws. Say we are moving towards one nation, one tax. That's a wonderful thing. See, it is unity in diversity. There is unity because unified way we are moving, but we are also protecting the spirit of federalism. Because you see, this GST Council is a solid example of a perfect federation, because both are moving in cooperation. In future, there may be disputes, there may be differences, everything is possible, but right now they are moving in tandem. That's a wonderful feature of this. So in this lecture, now what you understand what is GST, why GST has been introduced, and what is the modality, how GST has been made in India with this, and by virtue of these amendments, acts have been made. Central government made Central GST Act, UT, Union Territory GST Act, because it is necessary. They don't have assemblies. Wherever they have assemblies, for example, Delhi and Puducherry, they have their own assemblies. They are making laws. And IGST made by Parliament again. And whereas there was a provision for compensation also. If the states lose any revenue by virtue of GST, their losses will be compensated by a law. There is an act separately made, and some surcharge is collected, and with the help of that surcharge, the amount will be used to pay, compensate the states. Done. And state governments are making state GST laws, and union territory with assembly, they are making just like Delhi. So laws are made based on this structure, and that is implemented all over India simultaneously in one go. So in VAT it was not possible, but in GST it has been made possible thanks to the efforts made by government, particularly central government and union finance minister. Now GST is able to see the light of the day with the political will. That political will is there. With the political will, it has been made possible. So, next we would see into the details of GST further, right?